Okay, so for gold again, 1 hour chart, we can see the price is bullish. We've been bullish for quite a while. I think that's all-time highs if I'm not mistaken. Yeah, all-time highs. So yeah, so price is bullish, and I should be looking for continuation setup. So that's gonna help me take this trade higher. So on our 5 minute chart, we do have this bullish zone over here, and if I'm just gonna narrow it down, I'll wait and see how price reacts off this area here, which is also my area of supply and demand. And obviously we've come from this MSB. If I go to my 1 minute time frame, then I can use this area here, but it's not valid on my 1 minute time frame. On my 5 second chart, it is a valid zone, as you guys can see for yourself. You know, so this is where you have to be, you should know when to use different time frames to help to get yourself in. But in this situation here, we kind of already had the SBS where this is one, that's the two, that's the three, that's the four, that's the five, and we can see how price reacts, pushes higher. So in terms of me trying to take a trade from here, I mean, there's no need, because price has already done what it needed to do within that area of supply and demand. So when I let price play out, we take out the high, and if I just go to my 5 minute chart, so if I go to my 1 minute chart, a lot of people would have had this zone drawn out, and there's completely nothing wrong with it. But as I always say, when you have a zone right beneath us which has not been tapped into, there's always a chance that price is going to sweep it out. You have to understand, look what price looks like on my 1 minute zone. Look what the zone looks like on 1 minute zone. And then look at it on our 5 minute. It's just an area of candles. It's just an area of supply and demand. You know. So when you use a higher time frame, this is gonna help you get stopped out very quickly, or this is gonna help you get stopped out on fake potential moves. So in this situation here now, currently this is my one. I mean, this is the two, this is the three, four, five. So let's just see how price reacts now, and we can, okay, let me just go to 5. So we can see how we wick this area of supply and demand. Remember, this is still the bigger zone. But if there's an area where price is gonna bounce from, I mean, I would like it to be from here, because this is an area of supply and demand. This was the last move down, which helped to cause this market structure break, and you can see how we wicked the lows. So I am on my 5 minute chart, and many people probably try to use the 618, and you can see how you've been tagged in a long time ago, but now you are in a lot of drawdown. So this is where you have to be careful when using a 618. All I gotta do is just go to my lower time frame. All I gotta do is wait for a flip. I mean, I can even go down to my 15 second chart, and we can see my 15 second chart. We are below the SMAs, and technically we need to get above these highs here before I can look for anything else. And we don't quite get it based on my 15 second chart. I'm probably on my 1 minute. We completely annihilated that zone. On my 5 minute, we are still trading within that zone. Let's see if we wick. Price completely disrespects that zone, which is completely fine. But when you go to our 1 hour chart, all we're doing is facilitating a higher time frame zone. So on our higher time frame, this is the one, this is the one, this is the two, this is the three. We had out sweet. Now we're waiting for 4 and 5. So remember, time frame continuation is important. Understanding where you are within whatever time frame you're on. You can say that we had expanded reverse. So it really depends, innit, on your bias and what you're potentially looking for. And let's just go back to the 5 minute, see what's going on. Okay, so we've gone way past my trading time. Well, we haven't gone way past, but we've just gone past my trading time now. Let's see what happens now. I mean, on our 15 second chart, so this is why I like the 15 second chart sometimes, or the second charts, because primarily we were looking for longs, right? And we took out this low, we haven't taken out this high yet, but you can see how we were respecting SMA. So internally we had this area here, SPS model 1, 2, 3, 4, 5. Price shot higher. If he wasn't happy with that, no problem. We had this MSB here. We had another SPS model 1, 2, 3, 4, 5. Price shot higher. He wasn't happy with that, not a problem. We had another zone here where you had 1, 2, 3, 4, 5, and obviously probably get a 1-to-1, and then potentially got stopped at a break even. So you can't tell me that you couldn't have not caught a trade based off the 15-second chart. On our 1 minute, we are still waiting. We're still waiting for price to get above our SMAs. But then even so, all you can say is we are trading internally from this low to this high. And we can see that internally what we're doing, we're just in a pullback phase where price is making high highs and high lows, because we took out this high, took out this high, took out this high, took out this high. Now we're waiting for price to take out this high. So internally we'll be making high highs and high lows. So if I'm now trading a pullback, that is totally valid. But I also understand where we are within price based on my 1 minute time frame. On our 5 minute, we can see that price is also bearish based off the SMAs. But then on our 1 hour chart, we can see that price is overall bullish, and you just want to pull back, sweep something, tap into something, and then push higher. Like the same things happen over and over again. And if you let price play out, so I'm just trying to get this over and done with quickly. Okay, cool. So you guys saw for yourself how we was trading within this low to this high, and it was making higher highs and higher lows. So essentially what's happened now, price has closed below this low, price has let me go to 50-second chart. So price has closed below that low, price had a faint pullback. I mean, you can say we closed below these lows, so again you can see how we're below the SMA. So now we're trading with the continuation of the trend. You see that on our 1 minute time frame, as I said before, internally what we were trading between this low and this high, we were making highs and high lows, and you can see how price started to take out lows. We started to get below the SMA. So now what are we doing? Trading the continuation. So as I say, once you know where you are within price, like you are going to be alright. We can see on our 5 minute time frame that price is bearish based off our SMA, based off the 5 minute time frame. So what we're going to be doing, looking for shorts based off my SMA. So when you have alignment and you know where we are within price, like, you're going to be okay. In this situation here, what can this be? Expanded reversal. So you have to look for some sort of failure, some sort of reversal pattern, and hopefully that price potentially comes back to the 100 SMA where it balances itself out at least, and then makes its way back higher. Guys, as long as you have context within everything, you are going to be alright. You are going to be alright, guys. As I always say, victory belongs to the most tenacious, and I'll see you lots tomorrow. Love, my people.